David Lennox joins us now, resource analyst at Fat Profits. David, thanks for joining us today. Do you think these oil producers are seeing something that the rest of the world is not when it comes to the oil market? Because it was not an expected move at all.
Well, yeah, certainly it wasn't expected, and we have got the OPEC meeting coming up very shortly. So to make the announcement prior to that meeting did take the markets by surprise. But one has got to look at perhaps what they're looking at in terms of demand destruction over the course of the next 8 or 9 months if we see a recession. And that's primarily what I think OPEC is concerned about, the destruction of demand through a recession. We have seen the oil price reacting quite stiffly to that concern, and we've seen it trading down where it's been trading over the course of probably the last 3 or 4 weeks. There was some weakness in the oil price before that announcement was made. We did see the prices drop a little bit away, and I think that's what stimulated that action. Yes, it is going to be 1.15 million barrels. It does start in May, and it runs through to the end of this year. That's quite a significant cut when you have a look at the scheme of things, but we do believe that probably it is now, OPEC is now feeling quite comfortable that they're not going to see a surge of US domestic production coming on stream. Hence, they're back in control and happy to make the cuts.
Where does this put oil prices, David, at a time when inflation has come down, but it's still not out of the woods?
Look, yeah, certainly if we do see a concerted lift in the oil price over the course of an extended period, that's going to put some pressure back into the inflationary prices. Over the course of the last 6 months, the fall we've seen in the oil price has done inflation no harm at all, and we've seen it fall right away. So if we see those prices start to climb a little higher, but we certainly can't see them getting back towards those heady $100 barrels that we saw some time ago. If we do see some lift in the oil price and it stays sustained, then yes, you can expect to see filtering back into the broader markets and back into prices, and we will see perhaps a lift in inflation because of it. But I think at this point in time, one would have to suggest that there are other factors that could just offset a modest uplift in the energy prices, but it would only be modest if it's any higher, and we will see higher inflation coming back.
Where do you see prices headed, David? And what's your expectation of a global demand for energy as we expect a recession ahead?
The good thing with the energy markets is when we do see surprises, they tend to react very quickly. And we have already seen both Brent and WTI prices rising. We've probably seen the extent of those rises in the near term because of the announcement. You've got to remember we've still got to get through all of April before we even see the cuts coming through. So there will be some volatility in the numbers if markets remain concerned about destruction of demand. Overall, we do believe that with the second largest economy now moving through towards normal operations, that we will see the oil prices sustain some further upside, we believe, because you've got the biggest economy now running reasonably well, even though we've seen interest rates trying to slow it. We've got the second biggest consumer of oil now also opening up to normal business. One would suspect that demand would specifically start to rise. However, there is that over-the-shoulder market concern that there's going to be a recession, and really that's what market traders are looking for. That recession actually revealing itself and the demand destruction that will cause. We believe that there's potential for a recession, and that will definitely destroy demand. So one would have to be very careful making a prediction on demand. But at this point in time, we suspect that it will be lower. And that's why we've seen OPEC make this emergency cut of 1.15 million barrels.
All right, a tricky one for the energy market, David. Thanks so much for your insights today. David Lennox, their resource analyst at Fat Profits.